Well, I guess we'll try it. It's really weird because I get conflicting errors. So YouTube is telling me I have an excellent connection, which it wasn't before, but it's still giving me buffering. So I don't know. Something weird's going on, but thank you for being here. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Welcome to Forex.Today, the YouTube community of 17,500 currency traders. We gather every single day, approximately this time, to align our satellites. We talk technicals, we talk fundamentals, we talk trader psychology. We plan out tomorrow, we plan out next week, we plan out the rest of the year. So get involved, ask good questions, take notes, treat your fellow currency traders with dignity and with respect. And also, I'd like to thank Traders Away for being part of our community. If you need a foreign exchange broker that I trust and respect, then tradersway.com. Visit tradersway.com, open up a demo account, play some demo trades. See what happens. I think you're going to find things you like. Fast execution speed, narrow spreads, big swaps, world-class customer service. Anything else going on? What do you guys want to talk about today? It's kind of interesting. I think it was at the beginning of February. I said that February could come in like a lamb and go out like a lion. And holy smokes, did that come true. Wowzer. So, massive day yesterday. The bond market is kind of interesting because it's negatively correlated typically. Yesterday, the stock market and the bond market crashed, and wow, they both crashed. So that's kind of interesting. And isn't the Fed supposed to step in and keep interest rates low? So are they buying bonds, or like what's going on, Fed? What are you doing? So kind of interesting. Kind of interesting, huh? Very interesting day. So here's my biggest thing. Yeah. Last night was. did anybody get any sleep? Right. Okay. Any Gandalf says any recommended learning monetary policy? Well, I would take the fundamentals course at FX Bootcamp. It's 16-hour lecture on monetary policy, 16-hour course on monetary policy. That would probably be the one. But anyways, yeah. So last night's crazy, and there's two things going on, I guess, psychologically as I speak out loud about how I feel. The move is not unexpected. The move actually is happening perfectly on time. It's always scary when it happens. And the fear part is now I have to buy in. I don't want to buy too early, but I don't want to miss it. So, like, what do I do? It's going to be an interesting month. You're going to have a lot of work to do. Last night in the swing trading group, we talked about cross currents, right, or multiple currents, and you have to deal with that. So yeah, could be very interesting. But I know I need to be ready, willing, and able to do what I need to do. Okay, so if you didn't, right? Kenny's like, I slept like a baby because I planned the trade and invest. Yeah, but what I'm trying to say is now I have to tiptoe into other trades. I don't like buying while it's falling, but in this case I might have to, right? Also, I have like currency trading, but then I have like my personal stack, if you will, right? Like I got to take care of investment accounts, retirement accounts, college savings accounts, like money for my kids. So there's a lot going on. I'm like, I'm all stretched thin. So it's just, interesting times. Okay. The Fed wouldn't be embarrassed about dollar downward trend, right? But the thing is, are we expecting continued tumble today? We know March is the most challenging of the months for things like the stock market. So continue, well, maybe. That's not actually the issue. Not more down is not the issue. It's what are you going to do between now and the end of the year, which is the issue. So if you're a long-term bull, you got to buy this dip, and now, no. But anyways, wow, that's not blank. Template. Did I click the wrong blank? There you go. Okay, one thing that I thought we could talk about. Okay, one thing we could talk about is what a normal yield curve looks like. And a normal yield curve looks something like this. A yield curve that's about to crash, where the stock market is about to crash, looks kind of like this. And where we've been the last several years is like this. Okay? So normal the stock market's going to crash, where we've been, and now what it kind of looks like is we're moving around from the long end through the belly into even shorter dated, right? So what we're kind of looking at now is we're kind of like this right now. And so when they're talking about steepening of the curve, they're talking about the rise over the run. Oh, I know. Here we go again. The whole dang rise over the run. Okay? But we're looking at the slope of the yield curve. In this case, the long end is at what, 2.2? The 10-year, so the 30 is at 2.2. The 10-year is at 1.5, and that, you know, and 1.5 was interesting yesterday when we went from 1.5. That's when the stock market started to crash, and it's kind of, and then we went to 1.6, and then we came back down. It's interesting because, like, at that point, the 10-year was paying more than dividend yields on the S&P in S&P stock and whatever. I mean, there's interesting, strange, odd things going on the short run, and what the so we have interest rates rising here on the back end of the yield curve, okay, which means 30-year bonds are rising faster relative to the short end. Typically, the Fed only trades the short end, which is the Fed funds rate, and then since the financial crisis and the COVID crisis, they've been buying more middle and long end and participating in things like mortgage-backed securities, which obviously is not a short-term investment, but a longer-term one. So they've been playing on this side a little bit. So it'll be interesting if the Fed wants to keep interest rates low, if they don't want borrowing costs to be expensive, if they don't want mortgages at 5%, then they should be stepping in, you'd think, and driving this back down. Okay? So we'll see. One of the things I'm thinking of in this pullback in the stock market is, should I buy banking stocks? And one of the reasons I'm thinking about it now is that banks borrow short term, let's say even the Fed funds rate, not really, but let's say very, very short term, and then they lend it long term. So in this case, right, the rise over run is significant. So they borrow money, let's say at 1%, and then lend it to you to buy a house, and now maybe you pay as much as 4% right now. I don't know, but interest rates have skyrocketed since a year ago, right? You used to be able to pick it up at 3 or less. Now you're probably paying 4. So now the spread between the short date and the long date, right? The spread between the two is high. And so, right, that's one way of playing that. Other traders might say, well, this should normalize and head back down, and maybe the Fed drives this back down. Either way. Right, like there's this downward move that we have now very often is very often is a buying opportunity, unless you think something fundamentally has changed. Okay, so going back to this, like, hey, do you think it'll continue the tumble? Well, what I've been saying for weeks and weeks and weeks and weeks is that March typically has a decline, and by the end of the March, I want to be back in a rally. So what I don't know, so it seems like we might be getting that. What I don't know is it a one-day decline or a 3-week decline? Well, I don't know. So that's why now I have to be ready, willing, and able. And that's why we actually spent 3.5 hours yesterday planning all this stuff out in the swing trading group. So we have multiple plans and multiple currency pairs for a rough start to March, but looking at it as a buying opportunity. Not the end of the world. Okay. So that's yield curve analysis. we're getting probably closer to normal. This isn't quite normal. I might have to redraw this. Normal would be, let's say, about at inflation to, a little flatter, maybe more like that. Okay, so what'll happen is we don't want it to be too steep. So what'll happen is maybe let's say, I would expect, let's say by the end of the year, the 30-year could be at 3, the 10-year could be at 2, but that means that at some point the Fed will have to raise interest rates up a bit. Okay. Okay. But this isn't a debt level issue, though. But okay. So anyways, will it continue down? Well, we can do like this. Okay. What do we know here? What we know is this was crazy overvalued to begin with. So the only surprising part of this is the velocity in which it came down, in my opinion. Like, we know it's overvalued. We had some assumptions that March could open up very cold, okay? Come in like a lion and go out like a lamb. So, there's not a lot of surprise here. So now what we have to decide is, are we going to try this, or are we going to let it fall further and buy down here? Right? Like, are you going to get that, or are you going to get like something way down here? And the thing is, we don't know, so now we have a lot of work to do. Okay. How do you build a fundamental bias? Well, Mohammed, you have to take everything you learned and translate to what the central bank is going to do. That's it. And from that, you have a fundamental bias. So in many ways, you don't even create the fundamental bias. The central bank does. Your bias comes in, or your analysis comes in to determine what the central bank's doing now, but also to add to it, Mohammed, it's not what the central bank is doing now. It's what and when the central bank is going to change to do something next. And your understanding of the next. Okay? So, for example, the Fed is doing quantitative easing. Not quite, well, it has an accommodative stance. And right now they say they will continue to be accommodative. And that they have told us it will be years before they change this policy to a point where they have to raise interest rates even a little bit. And that's all of that information sets my bias. That's it. So I'm done, Mohammed. I know exactly what to do. Okay? And so now with dollar strength, I want to sell dollar. Okay? And we knew this was coming, so now it's here. Doesn't make it easy. It just makes it, I don't know. So now we know to sit up. I generally don't care about, I mean, the fibs are fibs. It's great. I mean, there will be other reasons to buy, and then I'll look, and whether it's a 618 or a 382, I'm buying it for other reasons anyways, so, right. Mohammed says, I feel like I'm joining the party late. Yes, sort of. I mean, the Fed decision was a year ago. But there's years left, so you're not that late. Okay. So we got work to do is all I'm saying. Okay, we got work to do. Switching over to a biddy, let's do some Okay? And some people are very upset right now that Bitcoin has come down so hard. We planned it a week and a half ago. We are not. And remember, I drew these orange lines from here to here to here before there were any candles. And we got it almost to the exact price, like literally to the dollar. Isn't that neat?